Imagine waking up to discover that every major broker now offers an XRP ETF. And suddenly millions of investors are clamoring to buy the same limited supply token you've been watching for years. Will there even be enough XRP left for you? Today on EconGeoFinance Insights, we're demystifying XRP supply, the ETF approval race, and why some analysts warn of a looming supply shock. Grab your favorite beverage and let's dive in. To understand the potential supply crunch, you need to know what XRP is. XRP is the native cryptocurrency of the XRP ledger and was created by Ripple Labs to enable fast, low-cost cross-border payments. Unlike Bitcoin or Ethereum, all of XRP's 100 billion tokens were pre-minted at inception. Ripple holds a significant portion of these tokens in escrow, and the rest circulate among investors and institutions. But how many tokens are actually in the market? As of mid-2025, only about 59 billion XRP are circulating. The ownership is highly concentrated. The top 10 wallets control 41% of all supply, and the top 20 wallets control half. Even more telling, just 663 wallets hold 5 million XRP or more, meaning roughly 3 billion XRP, 5% of circulating supply, are likely held by Ripple insiders. That leaves a surprisingly shallow pool for the rest of the market. So what is a cryptocurrency ETF? An exchange-traded fund allows investors to buy shares that track the price of an underlying asset without holding the asset itself. With Bitcoin, futures-based ETFs paved the way for spot ETFs in 2024, unleashing billions of dollars of demand. The same playbook appears to be unfolding for XRP. Futures-based XRP ETFs have launched and are building familiarity with the token. Asset managers like WisdomTree, Franklin Templeton, Bitwise and Grayscale have filed spot XRP ETF applications. Analysts believe that futures ETFs often serve as a regulatory precursor to spot ETFs, and approval for spot XRP ETFs could come as soon as late 2025. If that happens, every traditional broker could offer XRP exposure, opening the floodgates to a wave of demand. Here's where the supply shock talk comes in. Imagine a large fund launching with just $5 billion in assets. A figure Canary Capital's CEO Stephen McClurg thinks is possible in the first month. At today's prices, around $3, a $5 billion ETF would need roughly 1.67 billion XRP to back its shares. That's almost 3% of the entire circulating supply. And that's just one fund. Because the supply is top-heavy, pulling even a few percent into ETFs could tighten the available float. In addition, Ripple's monthly escrow releases, 1 billion XRP each month, often result in 700 million being locked back up, leaving only a portion available for trading. High demand from ETFs plus ongoing cross-border use could mean there isn't enough liquid XRP to satisfy everyone at current prices, pushing prices higher. Investors worry that if institutions scoop up large chunks, retail buyers like you might find it harder to accumulate XRP at reasonable prices. Not everyone agrees that an ETF boom would lead to a shortage. Some analysts question whether there will be meaningful institutional interest. On social media, crypto analyst AdrianoFeria.eth argued that Ripple ETFs will most likely mark the beginning of the end for XRP because he highly doubts there will be any meaningful institutional interest. Critics say XRP lacks the narrative power of Bitcoin, digital gold, or Ethereum, decentralized application backbone. Optimists counter that XRP's efficiency makes it perfect for cross-border payments, and that a spot ETF could draw billions from institutions. Bloomberg analyst James Seyffart recently estimated a 95% chance of approval for XRP and other altcoin ETFs in 2025. If he's right, XRP could follow the Bitcoin blueprint, futures ETF spot ETF mainstream adoption. Let's imagine a scenario. Multiple ETFs launch, each attracting billions in assets. Exchanges, liquidity providers, and cross-border remittance platforms would all be competing for the same limited XRP supply. Because supply is fixed and new tokens aren't mined, the only way to meet demand is for price to rise until holders are willing to sell. This supply shock could push XRP's price significantly higher, rewarding early investors but making it expensive for latecomers. However, it's also possible that ETF launches disappoint, and institutional money stays away. If that happens, ETFs could flop, and the price might remain near current levels. The truth likely lies somewhere in between. ETFs will create additional demand, but the market will adjust through price changes. So, will there be enough XRP left once ETFs are approved? The honest answer is, it depends. XRP has a fixed supply of 100 billion tokens and a concentrated ownership structure. New ETFs could soak up a noticeable chunk of the liquid supply, potentially creating a supply squeeze and higher prices. Yet skeptics warn that institutional interest may be limited, and a supply shock isn't guaranteed. As an everyday investor, your takeaway should be that XRP's supply dynamics make it sensitive to large inflows. And remember, price will adjust to balance supply and demand. The best strategy is to stay informed, diversify, and invest only what you can afford to lose. For more deep dive explainers on crypto, economics, geopolitics, and finance, subscribe to EconGeoFinance Insights. And tell us in the comments, do you think XRP will face a supply crunch?